Joining me live is REA Group's senior economist, Eleanor Creagh. It's a funny old world out there at the moment. This is more huge growth as we see all the pain that people are suffering. Property prices are going straight up.
Yeah, look, certainly it is no mean feat in the face of such a substantial interest rate tightening that we've seen since May 2022. So we're expecting that home prices are going to continue to lift in the period ahead, and that we're going to continue to record this pretty solid pace of monthly growth, particularly given where affordability is at the moment. We know that affordability has deteriorated to the lowest level in at least 3 decades. Interest rates are much higher, borrowing capacities have been reduced, and mortgage servicing costs have surged. And many households are struggling under the cost of living crisis. But still, we're seeing that home prices are continuing to lift, and we're expecting that that's going to continue to be the case with really this ongoing supply-demand mismatch powering and fueling home prices forward. So we know that we've got strong home buying demand, very tight rental markets, strong population growth, those home equity gains of recent years incentivizing upgrade activity. And at the same time, the continued slowdown in the delivery of new builds, the construction industry remains constrained. And we're just not seeing sufficient supply of housing to meet that strength in home buying demand. And that's continuing to fuel home price growth.
And Sydney continues to lead the way. It's almost moved away from Melbourne, and Melbourne and Brisbane in there almost neck and neck behind Sydney.
So we're seeing that Sydney continues to record strong growth. Yes, actually, it's Perth that's the strongest performing market over the past year, and we're expecting that Perth will remain the strongest performing market. So we've seen that home prices in Perth have jumped a little over 20% over the past year, but Sydney as well continues to record very strong growth. So we know that home prices in Sydney fell initially in 2022 when interest rates were first rising, but since their recovery or since their bottom in late 2022, so November 2022, Sydney home prices are up just a little over 12% until now. So continuing to record very strong growth, and as you say, Brisbane as well, also recording strong growth since December 2022, with Brisbane home prices up almost 20% since that low point after those price falls when interest rates were first rising. And of course, that strong growth in Brisbane has really reshuffled the ranks of our most expensive capital cities. And Brisbane is now our second most expensive capital city, on par with Canberra, so ahead of Melbourne now.
Yeah, it's been interesting to watch the way that has moved. Now, inflation, we had a story and we had a live cross to Adelaide there with one of our reporters, Monique. What are you seeing here, Eleanor? It's a difficult balancing act for the RBA because we are teetering on the edge of a recession. Inflation numbers are up, but if they do jack interest rates up too much, it could just well tip us over the edge.
Look, I think that that's exactly the difficulty the Reserve Bank are facing at the moment. And they are going to be very much guided by the economic data. It does look like inflation is being much slower to move lower, and those price pressures are remaining more sticky if we use the monthly CPI indicator as a guide. And certainly there's a lot of uncertainty in the economy at the moment. We know we've still got uncertainty around the economic outlook, particularly as it relates to policy lags in terms of the substantial interest rate tightening that we've already seen, still catching up to consumers, to households, to businesses. Of course, the path for household spending and consequently inflation's path back to target, which at the moment it looks like we're seeing inflation is slower to move lower. However, I think we have to be slightly cautious that the monthly indicator is not always as comprehensive, or it isn't as comprehensive as the quarterly indicator, and it can be misleading. Certainly, I think the risk of another rate rise this year has increased. And it really brings focus firmly onto that June quarter inflation report out in late July, which will really confirm further whether inflation is remaining as sticky as it looks like it might be based on that monthly CPI indicator. So we know that in the December 2023 quarter, for example, we saw that the October monthly inflation really didn't provide a great read for the final quarterly figure, which was quite a bit lower, actually. So I think we're all eyes on that June quarter inflation data in late July.
Yeah, much more comprehensive figures to come out, as you say, in a few weeks' time than what we saw yesterday, and that will give us a little bit more clarity on the whole thing. Eleanor, thank you. Have a lovely weekend.
Thank you for having me, and you.